Hey guys, it is Saturday and we're looking to trade the start of October week 4, 2019. Taking a look at the S&P 500 here. And remember that anything that I say about the S&P 500 is really just a benchmark to sort of teach you how to look at anything you trade, be it Apple, Bitcoin, oil, gold, whatever. You can take out a daily chart with all the same configurations on it. You can look for the same kind of gaps and stuff, everything that's happening with the S&P 500. It's just the ultimate benchmark for anything else you trade. So anyway, here we are on the S&P 500, and there are two key levels that we are looking at right now. One is this 29.93 level. You can say this level, give or take a point or so. What it comes from is the high that we made last Friday, not the Friday that we just traded, but last Friday when we came in ready to trade the China trade deal. And we came in on this huge gap up open over the 20-day simple moving average and over this whole cluster of simple moving averages that we had just closed on the day before, and we gapped up open here. Above the 20-day, we made this high at 29.93. This took out the high that we had made on October 1st. And look at this nasty day that we traded on October 1st. We opened right on the 20-day simple moving average. We moved up and failed at a high of 29.92.50, and then we sold off from there, and we had this 10-day simple moving average crossing down through the 20-day on that day, and you can see the sell-off that produced. And then here it was all turned around. We closed above, as we went into last Friday, we closed above on Thursday above this cluster of simple moving averages, gapped up back open above the 20-day, traded up to 29.93, making a little bit higher high, and sold off from there. But then this week that we just traded, we come in, we made another higher high and closed above it, but then we turned around the next day, made a lower high and closed below it. Then on Thursday of this week, we gapped up open once again. We made another really, really tiny gap, gapped up open once again, made another higher high, this time all the way up at 3,008. Made a higher high for the month, made a higher closing high, and then here we are on Friday. We came in and we really couldn't hold our heads above anything. In fact, our high for the day on Friday was 3,000 exactly. That's kind of spooky when we have those perfect round numbers as our high or low on the day. And as soon as we started trading under this 29.93 level, the selling really got accelerated. And at the end of the day, we came back and we tried to take back this 29.93, but we failed right there. You can look at a 5-minute intraday chart and see how we failed against this 29.93 level. And we sold off into the close to close at 29.8620. When we look to the left, once again, you can see 29.92.50 or so was the high on October 1st. And in the days preceding, just before that, we were not able to penetrate this level either. At the September high, going right around the days of the September high, we were making closes. We made a close above it, and we kept holding support, never making a close below it. We made the September high at 30.22, kind of rolled over the next day, made our first close below this level, and then the chop began. And so the story continues here, still to this day, at this 29.92 to 93 level. And then when we look a little further left on the chart at what was going on in the summer as we led into the all-time high, you can see there was a move up and a close above, and then a little sell-off, failure, close below, and then here was a move up above and a close sort of on it. But then the next day we began this support again, chop, 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 back and forth. Here are the days leading up to this high at 30.28, which is our all-time high, and then the subsequent rollover. And you can see, in conjunction with breaking the 10 and the 20-day simple moving averages, we also broke this 29.93 level and closed below it. So there is strong evidence that there is a sort of a lack of buying interest. We get above this level, and then shit just starts to hit the fan. We lose confidence, and we break and we close back below this level. And now we're having our weakest effort yet to stay above this level. So what we need to see when we come into next week is a clear move above this 29.92 to 93 level, and rise on out of there and build a solid solid base that is not closed below. You can dip below it intraday, but you must come back and close above it. And then below that, our low of day on Friday held at 29.76 versus this low that we had set on Tuesday that creates this gap, this little gap that runs from 29.73 to 29.66. So we held open this gap by holding a higher low against the gap support that was created on Tuesday's open. And right now our 10-day simple moving average is barreling towards this gap. And by Monday, it's going to be, I think, at minimum right underneath the gap, or it's going to be right up in the gap. And by Tuesday, as long as we at least stay sideways up here, this 10-day is going to rise up in and over this gap. So in filling this gap, if this gap isn't filled like on Monday, you're going to have the problem of the 10-day simple moving average moving up into here. And if we make another move up here above 29.93 that turns around and fails, in order to get back here and fill this gap, we're going to end up breaking the 10-day in order to do that. And you can see what starts to happen when we start to break the simple moving averages. After having this nice 1, 2, 3, 4, 5, 6 trading days in a row of not making any contact whatsoever with a moving average, to start making contact with them again sometimes is the opening scenario to a greater sell-off. So what we want to see happen if we're bullish is we want to see this move out above 29.93 with on a closing basis and go. Or if we just want to see the selling start and get it over with, we're going to come in, fail that 29.93, break 29.73, fill this gap, and then even get into this gap down here. This huge gap down here that was left between Thursday and Friday coming into the trade deal, the trade negotiations a week ago. All of the simple moving averages now, the 100, the 50, the 20, and the 10-day are all in here. It's the 10-day that's going to maybe rise out of here, but then you're going to have the 20, 50, and the 100-day all sitting in here in this gap just below. So this would be, in order to fill this gap, there's going to have to be a break of all these simple moving averages. And if the market really wants to, float things and get things going to a new all-time high, I don't know that we can suffer another one of these breaks of all these simple moving averages again, because then instead we're going to have sort of a repeat of what we saw last quarter, where we just sell off into Christmas, which was unheard of. And I've been day trading since 2005, and I'd never seen a sell-off into Christmas, with the exception of the end of 2012, and that was because we had the fiscal cliff thing going on. Even in 2008, at the end of 2008, even in that year, we had a Christmas rally. So last year was really something of the likes of which we had not seen in a long, long time. So anyway, that's what's going on with the S&P. So 29.93, give or take a point, up top on a closing basis, needs to hold. Down below, 29.73 needs to hold, and then we might be in a chop zone here, 20-point chop zone for a few days while we wait for the 10-day simple moving average to catch up, and for price to just want to move away from that moving average so as not to break it. What's going on with the calendar? Today is the anniversary of the 1987 crash. Happy crash day. Next week, we get into Wednesday. We're going to have Boeing and Cat report before the open. Those are, probably the two most important, Dow Industrial names right now, because they're both involved with China. Boeing has had a friggin' horrible day on Friday. Maybe we're going to see some short covering on Monday, Tuesday, or if we see continuation of the selling on Monday and Tuesday, maybe that's what's going to keep us either in that chop zone on the S&P or even just push us down. But by Wednesday, before the open, we ought to see some short covering, probably on Tuesday, as we get ready for those earnings to come out. And then we have Microsoft and Tesla after the bell. Then on Thursday, we have Twitter before the open, Amazon after the bell, and Thursday of next week marks the anniversary of the 1929 crash. 90th anniversary. And the 1929 crash started on a Thursday, continued on a Friday, escalated on a Monday, and then the capitulation day was Tuesday. So anyway, that's probably where the structure of our market sell-offs that Art Cashin always tells us about, where that comes from, how they start on Thursday, continue on Friday, escalate, or find capitulation on Monday, Tuesday. Anyway, so that's next week. The following week we have Google on Monday after the bell, and then probably our most important week, or day of the whole month, is the final day, is the second to last day of the month. The FOMC statement is on Wednesday, and then Apple and Facebook after the close. We are at the end of the month, not next week, but the following week. So this will be November week 1, because our first, the Friday of that week is November 1st. So that this will be November week 1, even though we don't trade the month of November till Friday. But keep in mind, with 2 days of settlement, that means everything trades till Tuesday. So if you bought something at the end of the day on Tuesday, it settles on Thursday. So that will be the last day of trading for things to settle in the month of October. So if there's any kind of change of heart or shenanigans going on in difference, besides the fact that we've got the Fed on Wednesday, Tuesday will be that last day to trade in October and have it settle in the month of October. So there's something to be said there about, some change in behavior that could happen between Tuesday and Wednesday, or a remarkable change in behavior between Monday and Tuesday that begins on Tuesday and maybe follows through after that. Okay, I hope that helped you out and that you understand where we are at, and that this helps you make better decisions on Monday. Just cordon off this area on your S&P 500 chart, 2993 to 2973. And to be the most bullish, to be buying calls above 3,010 or so, you need to see movement and closure above 29.93. If you're going to be buying calls in here, they're probably better off to be bought as a base to be shorted against. Short call spreads are going to work great in here if we're just going to chop in this 20-point range, and of course short put spreads as well. And if we come in and we break Friday's low, obviously if there's enough momentum, we're going to fill this gap, and we could end up breaking the 10-day, and that's going to start a stronger sell-off. Okay, hope this all helped you and helps you make some better decisions on Monday morning. Have a great rest of your weekend.